Hey, it's Clay Trader, and this will be a video chart on EMWW, Structural Enhancement Technologies Corp. Before I get started, I would like to note to please check my IRP disclaimer. With that being said, for you risk versus reward players and people that like potential bottom bouncers, this is the chart for you. Hopefully you can see that. Chart made a great move here, and then the past 3 days has been pulling back. But like I said, for those people that like to play the bottoms and play risk versus reward, this chart is definitely setting up for that. So that's what I want to base the chart around is, the risk versus reward setup and, where the bottom bounce could potentially take place at. So the first area and main area that we want to keep our eyes on is this level right down here at a penny. So I'm going to change this to green and make this an extra thick line because this is a very important level of support, and this is basically where the risk versus reward revolves around. You can see here we had 3 days, 4 days, basically 5, 6, 7, so you get the point. Multiple days where the price has come down here and bounced off this level. So a penny, besides being the technical support level, a penny is always a psychological support level anyway. So when you have the psychological level and then you have all this right here that's showing us that it's been a support in the past, this looks like an area where, as history has shown us, has been a strong level of support. So for you risk versus reward players, you entries, all the way, in this area here with your stop loss that can control your risk. And if it does bounce and head back up to even half of where it was up here, I'm not going to do the math for you, but you can see that percentage wise, that'd be a very nice bounce. So obviously the key with our risk versus reward is setting those stop losses and honoring them. But if the price does start to form a bottom right here in this area here, like it has in the past, it could shape up to be a very nice bounce. And that's where it falls into the category for you bottom feeders too, bottom bouncers. If you're looking for a bottom bounce, I hate to keep going back to it, but as past history has shown, this penny level has been very consistent and very predictable in terms of being a bottom. So definitely keep your eye on that. Now, with any sort of bottom bounce, the next level becomes where are the momentum levels at to really start to get where the bottom bounce could gain momentum in the other direction. And the first one to keep your eyes on is going to be this purple line here, which is the 50-day simple moving average, and that's valued at 0.018 and 0.0185 if you want to get really specific. But with any sort of bounce, this will be the first key level of resistance that the price will need to get above, and then actually after that, the resistance levels really start to space out because the next one, is not all the way up here until the high of today's candle, which was at 0.029. So quickly going to get that changed to red to represent a resistance. But the point being, with any sort of strong bounce and a break of this 50-day simple moving average, this is a pretty big space here where the next level of resistance is. So, and then after that, the resistance levels stay pretty consistently spaced out. But like going back to the point I was making earlier, if you're controlling your risk and you do get a bounce, even if it just went up halfway as high as it did here when it hit 4 cents, that's still a really good percentage move. So, that's just the whole point of things is, even playing it conservative and saying, well, let's say it doesn't even go up to 4 cents, but only halfway, that's still a nice, green move for your portfolio off the bounce. What did I want to see? Oh, and then down here, the relative strength index, you can see that seen from the lows before, it is also approaching that level. So from an indicator perspective, just to help kind of back up the price action, the indicator is getting down towards that low here where it's been before. Obviously, price action and volume are the two key most important indicators, but when you're throwing the RSI, things like this, it is always good for secondary kind of perspective on things. So again, real quick in a nutshell, for you risk versus reward players, 1 cent, and this area right here is going to be the level that history has shown us has been the bottom. Set those stop losses, but if you do get the bounce, look for a break of the 50-period simple moving average here, and then after that, the resistance levels really do space out. So if there are any other questions on the chart, please let me know. But again, if If you love those risk versus reward, get this one on your radars for tomorrow. Again, EMWW. Let me know if you have any questions. Thank you for listening.